You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose and the Loose. I hope you're doing well on this Tuesday. The idea of today's topic actually was sparked by the fact that I've moved a good chunk of my money towards Wealthsimple. A while ago, you probably know that already, but I work at National Bank for like 13 years, and then I quit my job to spend all my time on dividend stocks rock. That happened in 2017, and since then I never looked back. I'm just enjoying like this new online business and having a lot of fun helping a lot more people invest with conviction. So that's the role that I give myself. I just love doing that, and I've been faithful to national banks. I have like all my personal, all my corporate, all my investment, everything is at National Bank, and they're like, of course, various business activity segment. The reason why I decided to move my Lira account and my RSP to Wealthsimple is they offer me a 2% cash back. They have like that crazy promotion. Actually, it's still in effect for the next 5 days. I think the deadline for that promotion is on March 15th. And this podcast is not sponsored, or I'm not getting paid anything to talk about Wealthsimple. I'm just telling you that's what I did because they have that promotion, 2% cash back on Lira and RSP. Of course, there are like terms and conditions. You have to hold that money with them for the next 2 years. You're gonna get like a monthly payment. That monthly payment, like for the 2% cashback, is taxable as well. Wealthsimple has like pros and cons in terms of platform. So just telling you what I did because 2% cashback. That's kind of crazy, right? So I decided to move over there, and then I had a lot of questions from members at DSR and other people, and of course that's climate of uncertainties is like sparking up this even more. Is there value in diversifying holdings between brokers? Or in like more simple word, is your money protected like with your brokerage service? So aside from some interruption that you can have, like sometimes it happens to like most brokerage firms. I know it happened with National Bank, but since I'm not like day trading, I don't care that much. Is there any like other advantage of like having more than one broker so you can trade or you can use different platforms? I would say probably like the biggest advantage I would see are like those promotions like this one, like with Wealthsimple at 2% cashback, or also the fact that some brokerage firms are giving you access to some research. Sometimes they're investment research, sometimes others like Morningstar, for example. So as a National Bank client, I have access to Morningstar research plus National Bank's investments. So that could be interesting. Some other platform has other features, but besides that, it's pretty much all the same, right? I have like a small Questrader account for my daughter. I have like my National Bank's account, and now I have like Wealthsimple. And I could tell you that like I like some stuff, I don't like some stuff. So in the end, it's pretty much comes down to the same thing. So if there was no cashback reward, I would not even do anything with my account. So the interest is a lot more towards security. Like, is your money safer if you invest into more than one broker? And I could think, well, if you have like several millions, probably, because of course we do have the Canadian Investor Protection Fund (CIPF) that will provide. It's limited protection, but it's still good protection in the case that your brokerage firm goes bankrupt. So you're protected up to $1 million for types of accounts. So $1 million for general accounts, another $1 million for registered accounts, so it's just like the RSPs and the life income funds, and then another $1 million into the RESPs. Just imagine that you had like for $1 million in RESPs. That would be crazy. But for general account, which are like the cash account, the margin account, the tax-free saving, and the first home savings account. So $1 million there, $1 million for RSPs. It's still a pretty decent coverage, and to be fair, if you're thinking about, and of course, they protect not from losses, but they really protect the fact that if your broker goes bankrupt, of course, your brokers is not allowed to use your fund to actually pay some debts and stuff like that. They're custodian of your assets, so they do not have that possibility unless you invest with like Mike's around the corner investment firm. Maybe they could fraud you, but in general, what really happens is those assets are already secured, and the CIPF will just help transition towards another broker. So you don't have to worry too much about that. But in the case of that money's gone, well, the only thing that you have to make sure is to look if your broker firm is part of the CIPF. If you're dealing with a major bank, probably you're good. Major financial institutions, such as like Wealthsimple as well, still part of CIPF. But I mean, just look at it, because if you're, again, investing with Mike's around the corner investment firm, maybe they're not part of that, and then maybe your money is not guaranteed. To give you an idea, it happened. I was surprised. I was like, when was the last time a recent brokerage firm went bankrupt in Canada? But it happened in 2015 with Octagon Capital Corporation, affecting like over 1,300 clients. And then we had in 2012, we had Barrett Capital, and then in 2011, MF Global. So about 3 firms in the past 10 years, 15 years or so. So not that often. On top of that, like, not huge firms. Honestly, like, I had to do the research because I did not even know about those firms. So I would feel very comfortable having my money with National Bank or any other banks, or even with Wealthsimple. I'm not worried at all. But I thought of like highlighting the fact that you need to have like several millions of dollars before you get to think about this, as long as your brokerage account is actually member of the CIPF. And I must add, diversification in terms of brokerage as a major flaw. That flaw is it's really tough to get a clear view of what you have, because you have now different statements, you have different login, and if you want to combine everything, it's a little bit harder. Like, fortunately, I don't have to care about that problem anymore because I use DSR Pro. So on my platform at Dividend Stocks Rock, for the pro members, you can build all the portfolios you have into one place, and the dashboard will create the aggregate that you need. So you can even actually create your accounts, your spouse accounts, and if you want to have like a global view just for your spouse, you can do that, and then you can do a combined with your accounts plus your spouse, or just yourself. So in other words, you can create a combination of the aggregated view of whatever you want, and it's going to do it in like a few clicks. If you are looking to build a better portfolio, if you are looking to clean up your portfolio but you struggle with paralysis analysis, well, I do have a webinar for you next week on March the 20th. We will talk about the 6 big risks of not cleaning your portfolio. So if you're thinking that everything is fine, well, there are like 6 major risks that could affect your portfolio if your portfolio is all cluttered, and also the 5 steps to use to sell quickly the stocks that should not belong in your portfolio and keep the right one inside your portfolio. It's not a matter of like always being right, but it's a matter of taking action and investing with conviction. So you can register to this webinar. It's 100% free at moosemarkets.com/webinar. So moosemarkets.com/webinar. The webinar, there will be a webinar replay for all registered attendees. So if you registered the webinar, even though you cannot attend to the live event, don't worry, you're going to send a link. You're going to receive the link in your email for the replay. We're going to talk about the risk of not cleaning up your portfolio and how you can do it the better way. So long story short, if you still have time, I mean, opening an account with Wealthsimple is going to take you like 30 minutes. I did that. Like, the process was super easy. I did not need it, but I also received a text and an email from someone working at Wealthsimple to help me out with the transaction. I called him just to know like how was their process on their end. So I was like very satisfied with that. Of course, Wealthsimple platform, not perfect. You cannot do the Norbit Gambits, for example. So you have to dig a little bit deeper to see if it's the right thing for you. But with a 2% cash back, I mean, I kind of like that sound of this. So anyways, you can go on the website. As I said, I'm not even going to give you my like affiliate link or anything because I just want to do an honest review on that. Having a diversification in terms of brokers, it's going to complicate things a little bit. And unless you have like $5 to $10 million and you're really afraid that all banks are going to go bankrupt, probably that you don't need that extra security. But I mean, some people just want to be safer than safe. So that's all good. You can do that. Keep in mind that that is like the CIPF is a part of the CDIC insurance. So that just insurance for like cash and GIC. So completely different story. The CIPF is really for your mutual funds, your ETFs, and your stocks and other like investment assets that you can hold at a brokerage firm. So, all right, Moose, that's enough for today. Tomorrow, we're going to talk a little bit about Trump. It's been a while that I haven't talked about it. So we're going to do a survey of like what's going on with him and the impact on the stock market for Canadians. All right, so that's enough for today. We're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.